So a few things about today's podcast. We want to talk about regulation in the crypto market, and we're focused on the U.S. side of regulation. And just a few things about crypto in general. Larry, hi, buddy, you're back. Larry, I'm just giving a few overview comments, and then we'll kick off as a joint team. So a few things about crypto. The daily trading volume in crypto today is about $150 billion worth of crypto trading, which is obviously substantial. The market value of cryptocurrency today in the market is about 1.15 trillion. Just to put that in perspective, that's about half the market cap of Apple stock. And Apple is the largest market cap company in the world. So it's an important asset. But frankly, crypto at the peak in the fourth quarter last year was about $3 trillion. So we're about a third of where crypto used to be, valuation-wise. It's important, but honestly, it's not overly important, but it's got a lot of attention. It's had a lot of volatility. There's been losses suffered, and it's really an asset class that's been, in the US anyway, falling through the regulatory cracks. And that's really what we want to talk about today, what's happening, what may happen in the future. But just a couple other quick data points. The number of coins that are traded today in the market are about 13,000 coins, of which Bitcoin and Ethereum comprise over half the market value of crypto trading coins. Okay, so it's really today a Bitcoin and Ethereum market that are traded on roughly 500 exchanges. So that's where the action is. And there are a bunch of smaller coins, many of them you've heard about before, stable coins, etc. But that's a little bit of an overview of the market. And if Larry can hear me, I'd love for Larry to introduce himself, give us his background, and equally importantly, give a disclaimer, because Larry is involved with a company called FTX, which I'm sure everyone knows about, and anything he says or does in no way, shape, or form reflects his role at FTX. So we have to make that very clear, that any comments and opinions are Larry's opinions and not anything to do with FTX. So got to make that crystal clear. And secondly, if you don't mind, Jerry, go to the next slide. We have a standard disclaimer we do every time, and it's hard to read, but what's the key takeaway in our disclaimer is we're allowed to give financial education, which is what this podcast is all about. We do not give investment advice. So triple underline that. This is not about investment advice. This is about education. So that we're allowed to do, and that's what this podcast is about. So if you don't mind, Jerry, go to the next slide. So just to remind people, Bridgepoint Capital has 3 lines of business. What we're doing in this podcast is a complement to one of our 3 lines of business, which is private wealth. And if you look on the right, this 3-legged stool is what we do and provide and offer in our private wealth practice. So basically, very simply, your net worth, which is a combination of your investable assets and your personal assets, which means things like your house, your car, your jewelry, your collectibles. The combination of those 2 things is your net worth. We help people optimize their investment approach, and it's something that I've done for many years. Previously, I did this for the partners of McKinsey & Company through their investment office, comprising 3,000 McKinsey partners, current and former, across 50 countries. On top of that, trust and estate planning is another area of competence that we help people think through. And pure and simple, think of your net worth as something that should be attended to, protected, ensure that later in life you have the wealth transfer objectives you want to achieve, whether it's taking care of your kids, your grandkids, or charitable donations, etc. And on top of that, you have tax planning. I tell people anyone can fill out a tax return. That's not where the expertise lies, but tax planning is crucial. You can document to the penny the value you create through the correct approach to minimizing your tax burden on a future taxable transaction. And that's something we spend a lot of time and effort on. And lastly, there's insurance. And we're not insurance brokers, but I can promise you there are certain insurance products. The one we like a lot, it's called private placement life insurance. Essentially, it's another tax-deferred vehicle for high net worth people. So you can put your assets in that tax-deferred vehicle and they avoid taxable costs until you withdraw the money. So they're very innovative, very slick, and it's something that we can help people with. So that's a little bit of background of what we do in private wealth. By the way, we offer up a free consultation to people if they want to learn more about this. And this is exactly what I did when I provided the service previously for people.
Just turning it on.
No, that's beautiful. We can hear you loud and clear. So Larry, my phone is next to my computer. So firstly, we're on the slide that you get to share your bio and give your disclaimer. So would you be kind enough to do that?
Sure. First of all, any views that I have are the views of Larry Thompson. They're not the views of FTX. It shouldn't be attributed to FTX in any way. These are strictly Larry Thompson's views as an individual on the meaning of those moving forward. So a little bit about my background. I started my career in finance about 38 years ago, actually a little bit more now, more like 40, when I joined a company called the Depository Trust Company. DTC was a depository, and it held most of the securities that were traded on the large exchanges. And at the time, there were three of them. It was the New York Stock Exchange, the American Stock Exchange, and NASDAQ. And we held about 95% of all of those securities. The key thing about that was, and I mention it because DTC and eventually its predecessor, DTCC, really were fintech type companies, very much aligned, when you think about it, to what we're doing right now in the crypto space. They were using technology to solve a problem, and the problem that they were solving was what was called the paperwork crisis that started in the late 1960s and continued to the early 1970s. And about 38 firms on Wall Street went out of business simply because they simply could not handle the volume of paper that was being generated on Wall Street when the volumes that were then taking place were probably no larger than about 10 to 15 million shares being traded in a day. DTC was one of the solutions that the industry came up with to immobilize those securities in one place called a depository, and would make book entry deliveries of those securities as they essentially were traded among the various broker houses that were broker dealers that were then in place, as well as the banks who held a large number of those securities in trust funds. So that problem was one of the problems that was solved by DTCC. I eventually was the general counsel of the firm and the vice chairman. I also dealt with a part of the firm called DTCC DerivServe, where I was the chairman of DTCC DerivServe. And DTCC DerivServe was really a swaps reporting mechanism, which was worldwide in nature. So it not only reported for swaps that were here in the U.S. to CFTC and eventually to the SEC, but also in Asia to the various regulators there, both the MAS as well as the Hong Kong regulators, as well as in Europe to ESMA. It really was a way to get a uniform picture of what was going on in the swaps arena. And the swaps arena, of course, was something that had a lot of interest to a lot of people, especially the regulators, because of what had happened during the 2008 to 2010 time period, when again we had a financial crisis that almost brought everybody down with the collapse of Lehman Brothers and AIG. All of those that were related, as you may recall, to swap data and those activities at that particular time. So I was there for a lot of those activities. I obviously was at DTCC when 9/11 occurred, and we had to deal with the fact that the New York Stock Exchange had to be closed for a week. We had to bring in numerous employees to help us get through that time period. I was the liaison to the city of New York during that time period and helped in that regard. We also had to go through Hurricane or Superstorm Sandy when large parts of Lower Manhattan were flooded, and that caused a lot of angst on the part of a lot of people. We got through that. We managed to work through that entire period as well as during 9/11. We continued to clear and settle securities. So on the last year that I was at DTCC, just before I retired, DTCC handled $2.3 quadrillion value of securities transaction. That's with a Q, quadrillion. And a quadrillion, as somebody once asked me, is a one with 19 zeros behind it, and it is 1,000 trillion, to give you some size and scope of the business that DTCC was involved in. Does that give you some idea, Mark, of what my background is?
It does, but I still can't get my head around a number with 19 zeros on it. But it's just a massive, massive volume. But also, you didn't tell us where you got your law degree from.
Well, I should have told you that because your son went to the same school. I got my undergraduate degree at Yale, but I got, most importantly, my law degree at UC Berkeley School of Law. So go Golden Bears. It was a wonderful place to go to school in the early 1970s, and I enjoyed every minute of being in school at Bolt Hall, as it was then known.
All right.
But now it's called UC Berkeley School of Law.
Well, you put the plug in, and I'm sure my son will appreciate that, and I think that's terrific. So thank you for that.
Thank you. Thanks for reminding me.
No worries.
I remember, the first time that we met, you actually had your UC Berkeley sweatshirt on, and it got me thinking about the good old days back at Berkeley.
Exactly. Phenomenal times. So,
or as some of us used to call it, berserkly.
I haven't heard that one before. That's a good one. I like that. I'll remember that.
Yeah.
So let's go to the next slide, Jerry, if you'd be kind enough to advance the slide. So this is really, I'll say, the framework for what we want to discuss today about current and pending and future regulations in the crypto market. And I'll just say we're drinking out of the fire hose here, so there's no way we can cover everything, but we can certainly, at a macro level, hit some of the key takeaways and high points. So I'm going to just say a couple quick things about this chart, and then Larry can add to it. We have some questions pre-drafted that I'll share with Larry to foster the discussion about what's going on in the regulation side of crypto. So firstly, there's three definitions, and depending on the answer of the definition, you have a different regulatory body that oversees that. So if you have a security, that's the purview of the SEC through the Security Act of 1933 and the 1934 Act, plus the Fed also plays a role here. So it's already fuzzy when you look at it, whether we're talking about a security, yes or no. But if it's a security, those are people that are top of mind. By the way, Congress, who can implement laws on anything and everything also has some influence and oversight here. And don't forget, all these regulatory bodies have to have budgets and hire people to basically enforce whatever regulations happen. And that's also another murky part of what we're dealing with here. So securities are one area of definition. Commodities is another definition. And then you have currency. And if you look at something like, say, a Bitcoin, people argue that it's a currency. Well, we have definitions on the next slide of what those mean from a legal standpoint, but those are the things that people are wrestling with. And these items on the left, SEC, Commodity Futures Trading Corp, the Federal Reserve, Congress, and others, they're the people that are trying to deal with this. So I'm going to ask my first mythical question to Larry, which is, how can regulators and policymakers design regulations and policy frameworks to balance the innovation that brings affordability and financial inclusion while maintaining oversight and consumer and investor protection? So Bitcoin was launched because the idea was it would be liberating, it would be efficient, it would be cheap, and frankly, on some levels, anonymous. And suddenly you have regulation coming in that creates friction in the business, which contributes to additional costs and delays, and the things that crypto was intended to cure are coming back in to the crypto space as a net negative. But how do you, Larry, consider regulators and policy design frameworks given that priority of decentralization and freedom? How do you think about that?
Well, I think, first of all, that's a lot of questions that you asked there. First one being, what is going to be the regulatory landscape for crypto? And that's an answer that, quite frankly, we don't have any very clear answers for at the moment. CFTC, which regulates commodities, was the first regulator to really sort of get into the business and understanding what Bitcoin and cryptocurrencies were all about. And they started a innovation lab under their chairman, J. Christopher Giancarlo, often referred to as the godfather of crypto. Chris Giancarlo really wanted to, get the CFTC out front and give it a head start in terms of understanding what could be innovative about all of the cryptocurrencies and the underlying technology, the blockchain technology. So from that standpoint, the CFTC has a large number of experiences dealing in this particular area and a lot of expertise dealing with it. They were the ones that, for instance, first granted a license to an exchange called LedgerX. They later gave it a derivatives clearing organization license as well for two currencies. One was Bitcoin, the other one was Ethereum. And LedgerX, which I am the chairman of the board of, can do derivatives, meaning futures and options, in both of those currencies. However, they have to be fully loaded, meaning that there's no leverage possibility because you have to put up 100% on each one of the transactions. So,
hey, Larry, just to put that in perspective, if I can just interrupt you briefly.
Sure.
You mentioned futures, and I'll just say leverage or capital behind a trade. Compare I'll call it fully funded crypto derivative. What is the amount of capital behind a 10-year treasury if you wanted to do a futures on a 10-year treasury?
Oh, probably about 35%.
Okay, so just imagine the difference between how much capital is behind a crypto strategy or trade versus other securities that regulators and others are familiar with. So it's a big difference. So
Huge difference.
Yeah. Okay. Go ahead.
Yeah. And what I was going to say is, look, what you really want to make certain is you want to make certain that all of the positives happen in the crypto marketplaces. So right now you have some competing bills that have been put into the legislative proposals. You have Senator Loomis and Senator Gillibrand who have put out a proposal for crypto. You have Senator Bozeman and Stabenow who have also put out a proposal. All of those would predominantly give the CFTC a leading role in the oversight of cryptocurrencies and these commodities. However, they also carve out a area for the SEC, the Securities and Exchange Commission. So to the extent that these currencies are being used to raise funds and have the characteristics of a security, they would be regulated by the SEC as well. So there is that experience. However, in my opinion, CFTC should be taking a very much a leading role because of the experience that they've had in supporting all of these areas before. They understand what's going on, and they understand what has been happening in this particular area, perhaps as much, if not more so, than any of the other regulators. You also have some pressure on the Fed. And let me go back a little bit to a little bit in time to 2008, 2009, when you had the Dodd-Frank legislation that went through Congress during the first term of our then President Obama. And essentially, what they were concerned about was the oversight of systemically important institutions. Crypto is probably not at that stage yet. And one of the things you mentioned earlier, Mark, was the cryptocurrency market cap, which is probably under $2 trillion at this point.
Yes, it is.
It used to be over $3 trillion. But as I mentioned earlier, if you look at the size of what DTCC does in and of itself, from the capital market standpoint, that is a very, very small marketplace. So crypto is still, from a systemic standpoint, not a systemically important, I would say, commodity at this particular point in time. So it doesn't reach that level. However, it perhaps can be, or at least the background with blockchain could be useful in terms of giving the regulators some tools whereby they will be able to better be able to see the transparency into those transactions. It's very clear to me that an on-chain data activity, if seen with a key regulator, would give them transparency into what's going on as opposed to an off-chain data setup. So, from a cost of regulating crypto, I think the fact that crypto is physical in nature and is on a chain at the moment makes it a lot easier to regulate and be able to get the data to the key regulators than some of the other asset classes where you've had to build from scratch all of the details involved in that.
I'll just say you have a digital footprint, which allows the regulators, frankly, to monitor. And I know that a lot of people that early on got involved with crypto were nefarious. They're doing it for money laundering reasons, et cetera. At least that was the rumors. So with, I'll just say, on-chain tracking, you can actually capture any, money laundering and all these other things that the regulators deeply care about.
Yeah, absolutely. And I think that's a wonderful thing for the regulators to have. And, you got to remember, those of us who are for crypto regulation, really are trying to ensure that there are basically four pillars for crypto regulation. The first and foremost is customer and investor protection. Second would be market integrity. Third would be identification and prevention of financial crimes that you just mentioned, Mark. And finally, to ensure systemic safety and soundness of the institutions, to make certain that the institutions that are involved in either the exchanges or the trading or the clearance of these transactions are ensuring systemic safety and soundness from a regulatory standpoint. And I think those are really the four pillars that you're going to continue to need. And I want to emphasize the first one, again, customer and investor protection. And in that regard, both the CFTC and the SEC, that's what they do. They oversee customer and investor protection for the marketplaces that they oversee. So the CFTC, which has a principle-based philosophy as opposed to a rules-based one, really, I think has some strengths there that are really very good for the marketplace, for the cryptocurrencies, because a principle-based approach would allow different models to be there as long as you get to the same results, as opposed to a rules-based one, which tends to be the way that the SEC follows. So from my standpoint, all of the bills that have so far been put into Congress, giving the CFTC the lead, both the Loomis and Gillibrand rule, as well as the Boozman-Stabenow one, give the CFTC a leading role. They don't diminish the role that the SEC would play. And in fact, it's an important role to make certain that there aren't any bad guys over there trying to raise funds in a manner which looks like a security. But it would give the first oversight role from an investor protection standpoint to the SEC, to the CFTC. And I think that's the way to go.
Let me ask a practical question about CFTC and the SEC.
Sure.
These are, forgive me for saying it this way, but these are bureaucrats, right? So I have to assume that, yeah, they care about their job. Yeah, they want to do the right things, but, they don't want to necessarily bring on additional mandates that make their job more challenging. How do you think those organizations can and will respond to, putting this additional mandate on them?
Well, I think the CFTC has responded quite well so far. As I mentioned earlier, they started an innovation lab. I now think the SEC has one as well. So, they're probably playing somewhat catch up. But the fact is, you need some kind of lab where you are testing out all of these various technologies to see which one works and how can they help the regulators do a better job at what they need to be doing. So to the extent that you have an on-chain, blockchain-based technology, that will help the regulators, I think, in the end, do their job more efficiently, quicker, better, and more completely than it would be without the regulators having these new technologies. So I think the technologies underlying Bitcoin, Ethereum, and all of the other ones will, in the end, be very helpful to the regulators in pursuing and doing a better job at what they do. And yes, they are bureaucrats, but they are our bureaucrats. And so we should really want to reach out and make certain that they have the right tools. Equally important, we really want to make certain that the U.S. marketplace continues to be a marketplace where innovation occurs. It's really important that if you're going to have crypto regulation, we should have crypto regulation here in the U.S. because it's good for the U.S. capital markets. Our markets are the deepest, the richest markets that there are from a capital market standpoint. We're the biggest capital markets player going is the U.S. government. And we should want that to continue from an innovation standpoint. That's how we get ahead in this country, is by having innovation take place here in the U.S.
I thought that was beautiful. I completely agree with that comment. I'll just say it feels like, I'll use a tortoise and the hare analogy. The crypto innovators are the tortoise. They get that right now. They're the hare, so they go really fast, and the regulators are the tortoise. They can't keep pace. So things are happening so fast. How do you narrow the gap of keeping the regulatory bodies as current as possible and allow innovation to proceed at the pace it's proceeding at? Or how do you balance those two?
Well, I think one of them is through the bills that are being put forth. And you do have, by the way, other institutions, such as the old company I was at, DTCC. DTCC is using blockchain technology in order to shorten the settlement cycle in the securities marketplace. That's one of the things that they've done. They've been innovating, looking at blockchain technology. So it's a very powerful tool. And I think the regulators are now beginning to pick up on that. And I don't really think that, contrary to popular belief, I don't think the regulators are all that slow. They understand that technology can be a huge help in helping them out. And they're using technology more and more to try to be able to bring greater efficiency to the examination process that they engage in, as well as the rulemaking that they have to engage in from time to time. So I'm pro regulation.
Well, given the fact that you spent a good portion of your career in, I'll just say, a regulatory environment, I would expect nothing less. But I do agree with you as well that for lots of reasons, investor protection being top of the list, that there has to be some oversight here so that waste, fraud, and abuse gets minimized and hopefully eliminated. Maybe just to take the conversation in a slightly different direction, there's been a lot of news lately about stable coins and, frankly, the collapse of these stable coins and the losses suffered by investors of what they thought was a safe investment, which clearly wasn't the case, plus exchanges that have been failing quite rapidly, quite frequently, and quite dramatically. How do you see that playing out? And I'll just say the politicians that like to get behind these news events to make, political gains for themselves. I'm going to just mention this senator from Massachusetts, and I'm an ex-Massachusetts resident, but Senator Warren. So there are people that make a lot of noise about, investor losses, et cetera. How do you see this political environment playing out? And just obviously it's pure speculation because no one knows. But what do you think is going to happen on that front?
Well, I mean, look, it's really important that we have investor protection rules in place. I've said that at least 3 or 4 times. Maybe this is the 5th or 6th time that I'm saying it. Let me say it again. It's really important that you have consumer and investor protection regimes in place. But I think the underlying technologies for blockchain, Ethereum, all of the blockchain technologies can be used to build better KYC tools, transaction monitoring, analytics. All of those things can be used and are being used by, companies already, such as FTX and other companies, to bring more transparency to the marketplace and to bring greater efficiencies in terms of how you build your risk tools and your risk models. So I think already we're seeing that there's going to be greater transparency in this particular commodity class of assets, crypto. And you will see in some of the other areas because you don't have the same analytics in place that you have in crypto at the moment. And the risk management tools that you're going to see being developed. the old KYC transaction monitoring is going to go through a metamorphosis. It's going to grow. It's going to morph into something that's a lot faster, a lot quicker, so that you can catch the bad guys before they take advantage of innocent investors in this marketplace. And look, there are going to be other things that you're going to have to be concerned about. It's not only just that you had the crypto winter that caused some of these companies to get into trouble, but you also had some thefts that took place. And some of those thefts were quite unique. And you're going to have to make certain as the companies begin to grow, that the regulators understand what the vulnerabilities are. And the best ones who understand the vulnerabilities are the people who are engaging in these transactions. They have a pretty good idea. I know we do at FTX have a pretty good idea of what the vulnerabilities are and how do you protect the individuals to make certain that they don't get taken advantage of, and that you really have in place good consumer and investor protection regimes to make certain that that doesn't happen.
Just random ideas. I hear you describing this. Do you see a potential for a FINRA like, I'll just say, self-monitoring, self-policing function as well in crypto? So the good guys of the world can ensure, compliance and make sure things are running smoothly. Would that be part of the future solution here?
Absolutely. But I also think there are going to be areas where the, FINRA or the NEA like institutions will also play a role as well. I think all of the regulators and the regulatees have a vested interest in making certain that the bad guys in all of this, the hackers and the other ones who would take advantage of innocent consumers and investors, are not part of the regime that gets locked into place. There's just simply no way that should be allowed to happen. It's not good for crypto. It's not good for the capital markets here in the U.S. It's not good for the capital markets on a global basis. So it's going to be in all of our interests to make certain that the bad guys are squeezed out and the good guys are allowed to be able to operate and to innovate and make the capital markets stronger.
Well, again, I applaud what you're saying, and I agree with you. I'm going to suggest, Larry, a pause here. I know we only have an hour for the session. Excuse me. We have a few minutes. I'm going to open it up to the audience if anyone would like to ask a question. I do have some questions I could ask you, Larry, but I'd like to hear what the audience has to say. If anyone wants to ask a question, there's the comment section on your screen. Feel free to ask it now.
Trying to log back in. Sorry about that.
No, don't worry. It was getting the feedback. So I see one coming up now from Jerry Chu. How will U.S. regulation align with the global landscape? This conversation has been very U.S.-centric, but crypto is a global phenomenon. So how do you see U.S. regulations harmonizing with non-U.S. regulation?
Well, look, first of all, there needs to be harmonization. The U.S. doesn't operate in a vacuum. It operates on a global scale. And the U.S. capital markets are important, not only to the capital markets here in the U.S. and the capital markets participants here in the U.S., but it's also key for the capital markets participants worldwide. They come here to, raise the funds that they need to do the kind of business that they want to have. And so it's important for us to make certain that we not only harmonize, but that we lead, which is why it's so important that our capital markets be a leader in this space, that we lead the effort to make certain that there's transparency and that there's better KYC and transaction monitoring and better customer and investor protection, market integrity, and the identification and prevention of financial crimes. All of those are really important to make certain that the global markets, capital markets, are functioning healthy and are performing the functions that they should do.
All right, well said. I'm going to ask the audience again if there's any additional questions that you have. Feel free to type it into the comment field, and we'll take them on. Okay, another question. How should decentralized finance be regulated? Very general question, but what any?
Well, I mean, to some extent, I've tried to answer that by saying that I think it should be regulated at the federal level by giving the oversight to the CFTC. And I'm somewhat biased in that fashion, in that I've dealt with the CFTC quite a bit. I know they have the expertise to oversee these marketplaces. They were the first ones to start looking at these markets under Chris Giancarlo. They set up the Innovation Lab at the CFTC. So they really have the experience of dealing with these marketplaces, and I think they should take the lead. But there's going to be a role to be played by the other regulators. The SEC will continue to have an important role, and the Fed will continue to have an important role. Remember, there's all kinds of questions that have been raised with the Fed. One of the questions is, should we have a digital dollar? That's a real question. I know the Fed is looking at it. And if there is a digital dollar, it has real implications for the U.S. capital markets, but also for the world's capital markets and that place. And also because of Dodd-Frank, the Fed oversees these agencies when it comes to systemically important institutions. So to the extent that you are a systemically important institution, be you a bank, a broker, or another type of entity, the Fed will have an interest in these areas. And to the extent that these markets begin to grow, and as I said earlier, they're relatively small right now, but they have the potential to grow and to become really important from an innovation standpoint. And more you're seeing, places like Africa and the Caribbean, South America, really getting involved in crypto, partially because these are areas where there are large numbers of individuals who are either underbanked or unbanked, meaning they don't have access to the banking services that we really take for granted here in the U.S. and in most other sophisticated marketplaces in Europe and in Asia. And it's really going to be an important lesson, I think, to see what happens in these areas and how it will grow.
You hit on a topic that in a previous podcast was actually something that was discussed, and you're so right. In so many of these markets, people are literally unbanked. And you mentioned taking for granted just simple ideas like having lines of credit, loans, so that people can help scale their businesses, et cetera. The unbanked don't have access to any of these, I can't say modern tools, but basic tools. So, that could be really empowering for the global economy. And one of the things about crypto that's so exciting, I'll just also say, with things like COVID, physical cash is not something that people really want to deal with because it does help transmit diseases and illnesses, et cetera. So having, a digital methodology to transact is certainly an enhancement. But we have a couple other questions, Larry, so let me go to those now, if I may.
Sure, please.
So Eddie Lou's asking a question. He's wondering if and when the regulations come, will they be either too harsh or too soft? I'll just say the Goldilocks approach of it's not too hot, not too cold, just right. what do you think the odds of the regulators getting the right balance between regulation and not stymieing innovation, which is obviously an important objective?
Well, I mean, time will tell, whether or not they get it right. The chances of them getting it right the first time around is probably slim to none, quite frankly. But I do think there is an opportunity to start a dialogue with the regulators and to try to work with them in fashioning the legislation in a way that promotes innovation, promotes safety and soundness, promotes customer and investor protection, promotes transparency, which is really important both from the regulatory standpoint as well as for individuals who are going to be investing, and the health of the capital markets. And the way to do that, quite frankly, is continuing the dialogue which is now taking place between the regulators, the Congress, and the industry. All three have to continue to dialogue with one another and be willing to make the sacrifices that are important. The industry has to embrace regulation. I think it's good for the industry to be regulated. I understand that, there are some purists who don't want regulation at all. I don't think that's going to stand up long term. There will be regulation in this area, and it's better if we are participants in it rather than sitting outside and being forced to be regulated by the Congress and other folks because people are being taken advantage of from a customer and investor protection standpoint. So there you got it from me. I don't have a crystal ball, but I would doubt the first time around it's going to be perfect.
I think you're probably right. I hope you're wrong, but you're probably right. I have a question from Lawyer Eric, if I may ask those now. It's 2 questions. First question, if you want to comment on the Ripple XRP case with the SEC. I don't know if that's something you're comfortable commenting on, but feel free to give me your thoughts and comments on that.
Well, I don't know enough about it. I'm a lawyer, and I'm a big believer that if you don't know anything about the facts and circumstances, you shouldn't really offer an opinion. And I don't know anything at all about the case. It's a private lawsuit. The only things that I know is what I've read in the papers, and quite frankly, I'd rather keep my opinion on that to myself for the moment.
That's completely fine. So that being the case, the second question will be a no comment, but it says, what do you think the outcome will be? So
no comment.
Exactly. I can answer that one for you. So I think we're actually good for now. If anyone has a final question, feel free to ask it. But we're getting near the end of the session, and I do have a couple of final comments. So if you have one more question, this is your shot. If not, we'll move on to the final comments. Okay, so we're going on the question front. If Jerry, if you'd be kind enough to advance the slide to the next one. This is legal definitions, but we've more or less covered this. But if anybody wants to see these definitions, we'll have them posted on our website. We'll have them available to you. But this is really the foundation of what's trying to be resolved. Are we dealing with what we'll call a security, a commodity, or a currency? Because that then helps drive who oversees the regulation in this area. So that's what the slide's about. If you kind of go to the final slide, please. So here's our contact information. By the way, if you want to reach Larry, feel free to outreach to me, Mark Young, or my partner and co-founder, Nadia Tien. You have our emails on the screen. Our offices are in Midtown, New York. We'd be delighted to continue this discussion with people at their leisure. And once again, I want to give a special round of thank you to Larry Thompson. I think his insights are invaluable. He's certainly open and engaging and forthright with his opinions. Larry, if you have any final thoughts or comments for the group, feel free to share now.
Well, I want to say thank you for having me on. I'm sorry that I had too many computers open and caused the feedback loop. I guess I need to catch up on my technology as well so that doesn't happen. And if you would have me back again, I think we'll be able to work it all out. And hopefully I can bring some more information to your listening audience.
Well, the first comment, Ken, and will you come back? The answer is a resounding yes. We'd be delighted to have you back. I think your insights are really powerful and invaluable. So thank you so much. And I hope the audience learned something from this podcast that will help you be more successful in your investing and business efforts going forward. So once again, everyone, thank you for your time, and we'll speak next Thursday. So everyone have a great day and appreciate your time.
Thank you, Mark.
All right. Bye-bye.
Bye.